Welcome to Matters Financial and Geopolitical from a Frontier. Thank you as always for stopping by. I hope you had a great weekend. My article over the weekend is called The Kachumbari Bond. It's not often that the annals of gastronomy and finance meet, unlike in the days of yore, when I traded the French markets and Chervin used to put me up in a suite at the Maurice, and we would both quaff some very fine wine, Chateau Margaux to be exact, at the Jules Verne restaurant, which was halfway up the Eiffel Tower. Kenya sold $2.1 billion of Kachumbari Eurobonds last week. It's not clear where the naming impulse came from, but for clarity's sake, Kachumbari is a fresh tomato and onion salad dish that is popular in the cuisines of East Africa. It's an uncooked salad dish consisting of chopped tomatoes, onions, and chili peppers. The Swahili word kachumbari originated from the Indian word kachumba. Therefore, I approve of the appellation because it speaks with some subtlety to an Indian Ocean heritage and in a circular manner brings us to Andrew Korobiko's point that the Indian Ocean region is expected to become the geostrategic center of gravity, and Kenya is not only a land-based transit state, but also a gateway to the Indian Ocean economy. Linguistics and gastronomy aside, Kenya sold $900 million of 7-year bonds priced at 7% and $1.2 billion of 12-year paper priced at 8%. These rates were achieved without the IMF's precautionary facility. The pricing was much lower than the initial pricing thoughts of 7.5% and 8.5%. Investors placed bids for a total of $9.5 billion. It would be churlish not to recognize this as frankly an outstanding outcome, especially when you consider the international backdrop. The tariff war has intensified, and the worry is that the curve continues to accelerate. Emerging and frontier markets are shivering as they start to factor in the China emerging and frontier markets, add Germany to that mix, feedback loop phenomenon. If China sneezes, a whole lot of countries are going to get a very serious bout of influenza. Interestingly, in our case, we're relatively immune to this phenomenon because China is not a big taker, avocado hopes aside, of our exports. Therefore, when you contextualize the bond, I find myself agreeing with Vinita Kotedia, macro strategist for sub-Saharan Africa at EFG Hermes, who said, "It's a very favorable rate given that Kenya hasn't finalized an agreement with the IMF. It looks like investors were more focused on the credibility of debt issues out of Kenya, and they aren't too worried. There's a broad consensus and agreement that Kenya does not face a balance of payments crisis similar to a country like Zambia," Qureshi said. What is clear to me is that there is a significant perception gap between what international investors are seeing and the domestic perspective. The proceeds will be used to fund infrastructure projects, general budgetary spending, and refinance part or all of a $750 million Eurobond that will mature on June 24, the ministry said. Net new money is $1.35 billion. How this is now deployed is crucial. What was also interesting is that both tenors of the new bond will be amortized at $300 million and $400 million respectively for the 7 and 12-year tenors annually in the last 3 years to maturity in order to avoid a surge in repayments. This is a welcome, more sophisticated nuance from the Treasury because it significantly reduces the bunching effect risk, the bullet repayment risk, and I'm sure went some way to boosting the price. Bondholders the world over are known as vigilantes, so what do they see that we are not seeing? They see 51 million Kenyans, future taxpayers, of course, good quality human capital evidenced in the ever-rising remittance curve, which is exactly the monetization of human capital, and a wide open opportunity. When I first arrived on the trading floor at Credit Suisse First Boston, every desk station had a Sun Microsystems computer. And the big swingers had three, in fact. Vinod Khosla, who was one of the founders of Sun Microsystems and bagged more than $1 billion, said this: "The future is not seen in the rearview mirror." This is a photograph of the Kenya government ringing the bell at the London Stock Exchange. The Kenya shilling is at 101.05. The NSE is plus 3.49% in 2019, trading at a P of 11.22. Nairobi All Shares up 3.49%, and the NSE 20 is down 5.94% year to date. Thank you for stopping by, and see you this evening on Metropole TV.